Look up. That's what 7 million people across Israel did in March of 2026. And what they saw in the sky was something no missile defense engineer, no Pentagon strategist ever wanted the world to see. This wasn't a meteor shower. This was AP-released footage. Iranian ballistic missiles deploying cluster bomblets, with dozens of submunitions streaking through the sky, past a multi-billion-dollar shield as if it wasn't there. This wasn't just an attack. It was the public demonstration that a fundamental equation of global security had just been broken. But that visible failure of technology is not the real story. It's the opening move in a quiet, coordinated war being waged on 4 separate fronts. A systematic takedown of the entire architecture of American power. This is the 4-pillar takedown. What we witnessed was not a random act of aggression. It was a calculated move in a coordinated assault on the 4 structural supports of American global dominance. To understand the risk, you must understand these 4 fronts. First, the erosion of military supremacy. Second, the compromise of digital infrastructure. Third, the fracturing of financial hegemony. And fourth, the degradation of intelligence dominance. Each pillar is being systematically weakened, creating cascade effects that will eventually reach your portfolio. To grasp the full extent of this exposure, we must begin where the first crack appeared, the now broken equation of military supremacy. The equation of military supremacy was, for decades, built on a simple, powerful premise: technological overmatch. Our defense architecture, from THAAD to Patriot, was engineered for a one-threat, one-response world. You fire a sophisticated, high-value interceptor at a single sophisticated, high-value projectile. In that closed system, the logic is clean, and the math works, until your opponent stops playing the one-on-one game. Iran's strategy exploits that design assumption instead of trying to match it. The Khurram-Shah 4 doesn't arrive as a single, discrete target. Late in its flight, it releases a cluster of submunitions, dozens of smaller, independent warheads in the terminal phase. According to a 2026 report from the Institute for the Study of War on the 2025-2026 conflict, each missile scattered anywhere from 24 to 80 of these submunitions. It's like trying to catch 100 baseballs thrown at you at once when your glove was engineered to catch one perfectly. The defensive layer is saturated. Some targets get through simply because you cannot engage them all. But the true kill mechanism isn't kinetic, it's economic. Here's where the defense cost equation breaks. A single US THAAD interceptor runs roughly $15 million. A Patriot PAC-3 is around $5 million. The Iranian ballistic missile delivering that cluster is in the $1 to $2 million range. On a simple one-to-one basis, you are already spending many times more to stop each threat than your adversary spends to create it. Now add the saturation. If one Khurram-Shah 4 forces you to fire at even a fraction of its 24 to 80 submunitions, you are no longer trading $15 million to stop a $1 million problem. You are committing dozens of interceptors, tens to hundreds of millions of dollars in defensive fire to blunt a single $1 to $2 million launch. Tactically, you may win the engagement on the radar screen. Strategically, you are losing it on the balance sheet. This stops being a contest of technology and becomes a war of economic attrition that steadily erodes the defender's fiscal position. This is the first pillar. Military supremacy cracking under the weight of an asymmetric strategy. It doesn't just change a regional conflict, it breaks the underlying logic that modern missile defense spending has been built on. And here is the most critical point. While the West is now forced to wrestle with this unwinnable hardware equation, the takedown strategy has already shifted battlefields. The second pillar of power isn't being targeted by missiles at all. It's going after the economic and digital infrastructure that underwrites US leverage quietly from within. That silent dismantling became deafeningly loud on March 2nd, 2026. Iranian drones hit 2 Amazon Web Services data centers in the United Arab Emirates. This was not a cyber incident. It was a kinetic strike that knocked both sites offline, confirmed by AWS's status page and semaphore, and it marked the first direct physical attack on a major cloud provider. At the same time, IRGC-affiliated media claimed strikes on Microsoft Azure facilities, hosting US Department of Defense and NATO workloads. Whether or not every detail was accurate, the message was simple. The West's digital military backbone is now framed as fair game. The target set has shifted from traditional bases to the physical hardware of cloud computing, financial systems, and AI, the economic nervous system itself. And in their own framing, Phase 2 is cyber operations against US domestic infrastructure, completing an escalation ladder from overseas bases to networks inside the US. This is the second pillar of American power, digital security, being dismantled. The economy concentrates key workloads in a few hyperscale campuses. Once one of them is proven vulnerable to a drone strike, every similar facility worldwide is exposed by precedent. That single event forces insurers, risk officers, and capital allocators to re-rate the physical risk on cloud and data center infrastructure. So the question for you as an investor is direct. How do you value a tech or AI stock, and how exposed is your current positioning? When the data centers its cash flows rely on are now treated as legitimate military targets. The war is no longer over there. It is now on the servers that run our world. And yet, this is still a sideshow. Functionally, strikes on US forces and on the cloud infrastructure that supports them weaken Washington before the contest over energy flows and dollar finance even begins. That is the main event. The world order transition Ray Dalio has been mapping for years, eroding US reserve currency privileges. In that context, the next pillar under attack is the third and most critical one, the petrodollar system itself. Understanding how that assault unfolds is the key to everything that follows. It happens because the fundamental equation of the petrodollar system has just been broken. For decades, the bargain was straightforward. Washington provided the security umbrella for the Gulf monarchies. In return, they priced oil in dollars and recycled their surplus revenues back into US assets, especially treasuries. That recycling sat under the US economy like scaffolding. Steady demand for US debt that helped suppress yields and let Washington run larger deficits at lower rates than would otherwise have been possible. That equation rested on one belief. The US was the guarantor of Gulf stability. Across the Gulf, that belief has been shaken by the war with Iran. Washington is now seen not just as failing to prevent escalation, but as dragging a stable region into war. UAE businessman Khalaf al-Habatour posted publicly to the former US president, Asus, who gave you the right to drag our region into a war with Iran. Once leaders see their security provider as a source of volatility, the logic of parking national savings in its debt is re-examined. On March 6, 2026, that reassessment went public when the Financial Times and Wall Street Journal reported that Saudi Arabia, the UAE, and Qatar are formally reviewing hundreds of billions in US investment pledges, and a Gulf official confirmed they're exploring force majeure clauses, language usually reserved for saying the underlying conditions of a deal no longer hold.
This is the third and most critical pillar, financial hegemony, starting to crack. This is no longer about missiles, it's about money.
When sovereign wealth funds publicly float force majeure on US commitments, they signal that the petrodollar recycling mechanism itself is now in question. This is what Ray Dalio calls a capital war. Capital moving for political survival, not just return. For Gulf rulers, keeping spare dollars in treasuries now embeds political risk. With China offering scale and its own centre of gravity, there are new pipes for surplus capital. Chinese markets, renminbi-denominated assets, joint funds, and infrastructure deals that deepen non-US ties. Each dollar deliberately routed into these channels is one less reinforcing America's financial dominance. FT and journal reports are not noise. From your view, is this just hardball inside the old security for recycling bargain, or the first real crack in the petrodollar system? Let me know in the comments. As that recycling mechanism weakens, the forces that kept US interest rates suppressed and equity valuations elevated start to reverse, and translating that reversal into concrete portfolio risk is where we go next. The translation from geopolitics to your portfolio runs through the US Treasury market, the bedrock where the price of money is set. When a Gulf-scale buyer with over $2 trillion in US-linked commitments flagged as at risk by the Financial Times steps back, demand for that debt weakens. This is not a forecast. It's simple supply and demand. When Gulf purchases slow, Treasury demand falls, so to fund deficits, the US must offer higher yields. The chain is mechanical. Less Gulf buying, weaker Treasury demand, higher Treasury yields, higher corporate borrowing costs, lower equity valuations, and more fragile bond prices. Economic models of the petrodollar unwind point to a structural 50-100 basis point push on Treasury yields, independent of the Federal Reserve. Enough of a shift in the risk-free rate to reprice long-duration bonds and corporate financing. That higher-for-longer outcome squeezes margins across the S&P 500 and the valuation multiples investors are willing to pay. A decision in Riyadh becomes a lower PAE on your index fund and a mark-to-market hit on the bond funds in your retirement account. When yields rise structurally, your bond ladder is not neutral. Prices of low-coupon bonds fall, and the longer the duration, the bigger the drawdown. That is why investors reevaluate fixed income, shortening duration to reduce sensitivity to rising yields, using Treasury inflation-protected securities for inflation and real rate protection, and adding non-USD assets and hard commodities to diversify dollar and US rate exposure. Here is where many investors make a potentially fatal mistake. The straight-line conclusion is that the dollar is finished, yet in moments of global instability, capital may stampede into whatever is still seen as safest. The first move can be a violent, paradoxical dollar rally that squeezes anyone who traded the obvious dollar collapse story, so you need to understand that before you reposition. This paradoxical strength is rooted in the fundamental architecture of global capital. The reality is more complex than what the doomsayers project. In a crisis, capital doesn't seek the strongest long-term economy. It seeks the deepest, most liquid pool to hide in. That pool is the US dollar. Despite the long-term de-dollarization trend, recent data from Amundi shows the dollar still accounts for approximately 58% of all global currency reserves. It remains the world's primary safe haven asset. We saw this play out in the market data. The Wall Street Journal confirmed that in early March 2026, as Iranian strikes escalated, the USD index strengthened against its peers. This creates a critical distinction for your decision-making, the difference between a short-term, tactical rally and the long-term strategic erosion we've been mapping. Think of this dollar strength not as a structural repair, but as a temporary buttress hastily erected against a crumbling wall. It masks the widening cracks underneath. This is not a signal to relax. It is a strategic window of opportunity. It buys you time to layer in hedges and rebalance your portfolio with calculation, not panic. But this window exists within a rapidly deteriorating security environment, and that brings us to the final and most unsettling piece of the puzzle. While financial analysts debate this paradox, military intelligence is grappling with an anomaly: the impossible, near-perfect accuracy of Iran's recent strikes. A capability they did not possess yesterday, suggesting a new, invisible hand is now guiding their aim. That invisible hand belongs to the fourth and final pillar of American power: informational dominance. For 40 years, America's greatest edge wasn't its weapons. It was knowing more, sooner, than everyone else. And the military, financial, and digital pillars quietly sat on top of that advantage. This is what makes Iran's recent strike accuracy a genuine anomaly. Instead of a broad barrage, they hit specific hotel rooms in Bahrain, housing American officials, and the exact site of a well-hidden THAAD radar in Jordan. Performance far beyond what Iran's own missiles and battlefield surveillance have shown in past conflicts, where they were able to hit bases or facilities, but not individual rooms and concealed radar nodes. The most credible explanation is a structural shift in targeting, driven by China's expanding satellite network, persistent commercial imagery that can be routed to partners and proxies outside traditional state channels. During the conflict, the Chinese satellite firm Mizar Vision, flagged by defense and open-source intelligence outlets, released real-time, sub-1 meter imagery of US assets and bases in the Gulf in the same operational window as Iranian strikes on those locations. Iran could, in theory, have relied on Russian space feeds, human sources, or even US leaks, but those channels are sporadic and imprecise. They don't explain synchronized, high-precision hits across multiple sites at once. That convergence of timing and capability makes a Chinese-enabled intelligence pipeline the leading, though not certain, explanation. In other words, the monopoly on overhead targeting data is gone. Think of it as a high-stakes poker table where, for decades, you were the only player who could quietly see everyone else's cards. Then overnight, one of your main rivals gets a clear look at your hand and the odds shift for good. America is now fighting partially blind, no longer the only player who can see the whole chessboard. And when Washington can't see cleanly, risk gets mispriced. Alliances feel less reliable, energy and shipping carry higher premia, and capital lives with sharper repricing shocks whenever the Gulf heats up. And with that, the fourth and final pillar, intelligence supremacy, is compromised. Military, financial, digital, and intelligence power, the four levers in this four-pillar takedown, are no longer insulated from direct challenge. All four pillars of the 40-year US power structure are now under simultaneous assault. This is the four-pillar takedown: a broken military shield, a vulnerable digital backbone, a fracturing financial alliance, and neutralized intelligence supremacy. This reality forces America into impossible choices, catastrophic escalation that makes the invasion of Iraq look like a practice run, or humiliating de-escalation to stop the financial bleeding. History is blunt. Under pressure, systems choose pride over peace until it's too late. The world being built in the wreckage of this conflict doesn't have America at its center. It was already being built. This war hit fast forward, and that brings us to the final equation. When those four pillars erode, capital gets more expensive, global demand for the dollar weakens, and security at home grows more fragile. The bill for these failures will be paid by every American, through your cost of living, the value of your currency, and the durability of your future. Subscribe now for non-obvious mapping of this realignment so you can keep adjusting your positioning and protecting the value of your capital.